Okay, people, welcome. So my name's Carol, also known as Carol Trades. So welcome to the channel for those of you who've not watched any of our videos before. So I've recently been asked a few questions regarding my trading, my strategy, kind of how I actually trade. So first things first, so I've been trading now since 2017, so like 8 going on to 9 years. I've gone through every single strategy, excuse me, that you can think of. Breakout traders, trendline traders, support and resistance traders, Fibonacci, every trader under the sun that you can imagine, which was not successful at until I started learning liquidity concepts. And it's not ICT, it's not smart money concepts, it's its own unique kind of concept, because the approach is simply based upon trading against every other trader, right? So the way the market makers made the game to be, this is how we trade, right? So I'm just briefly going to show you kind of the ideas of how I look at liquidity and how I mark up liquidity. So if you don't already know, obviously liquidity is what drives the market. Without it, it's like the fuel in the car, it simply doesn't move. Now, excuse me, I got a bit of a tickly throat. So in order for the market to move, we need fuel, right? And the fuel is retail traders. That's what's considered as liquidity. Now, if you don't know where liquidity is, you simply are liquidity. That's how the market functions, okay? So it doesn't matter how well you know yourself internally. If you don't know what you're looking at technical analysis wise, you are going to struggle, right? Of course, you're going to win some trades. You may make some money here and there, but over a sustained longer period of time, it's a high probability that you're not going to make money, right? Now, I'm not a master or a guru or an expert in any such way, okay? For the first 6 years of my trading journey, I've struggled consistently, right? And I struggled with mindset, I struggled with risk management, I struggled with just trading altogether. It all felt like a huge struggle over and over again, to the point where I was ripping my hair out. I didn't know what was going on. I was making the same mistakes over and over again. And that's because I had a gambling addiction, right? If you've not watched any of my previous videos, it's already on the channel. So I actually tried to make it in trading. Obviously I had the wrong mindset, because all I wanted to do was make money as fast as possible, the fastest way. So what happened instead was I got into debt, and then I got into more debt, and eventually that debt accumulated up to around £40,000. So I basically made money and I gave it all back to the market. Then I got actual debt, so credit cards, loans, overdrafts, you name it. And that was the start of my journey. So instead of me starting trading and going this way, I went completely the opposite direction. And that's the journey of a typical trader, I guess, okay? I had no mentor. I only had the videos in front of me, and there was no one to help me with anything. There was no community. I just struggled by myself, and it was painful, right? So anyway, so I'm just gonna draw, I'm just gonna basically draw a few ideas for you just to show you how I personally look at the market. Now, don't get me wrong, you can make money using any strategy, whether it's a breakout, whether it's trendline, whether it's smart money trading, whatever it is. This is just what resonates with me the most, because I always knew that the way that I was looking at the market wasn't what I was looking for, okay? Things made sense, but then they didn't make sense, and I just obviously lost way more trades than I won, and the risk reward never made sense, okay? So if you can see right in front of me here, we've got GBP USD, which is the only pair that I really trade. Every now and again I trade gold. Euro USD, not very often, okay? So GBP USD is my favorite. I don't know what it is about it. I just like the way it moves. It moves in the time I'm awake. So I'm currently living in Thailand. I moved out here 7 months ago. And the timing of when London and New York session is literally perfect, because it's afternoon to evening time. That's when I actually trade, okay? Anyway, I just wanted to give you a brief introduction of who I am, what I do, how I actually got here. Okay, so anyway, I will show you an example. So you can see today's day, we have Tuesday, which is still basically Asia session, nothing's even happened. The day prior, look, you can see very, very messy day. There's not really anything clarity-wise that I would take, right? Okay, so here's Sunday market open, okay? So first thing I look at, let's just rewind this to around Asia, right? Let's pretend we've just gotten to the charts and this is what we're looking at, right? So first thing that I'd mark up, I'd look at obviously where the market opened. So this is Sunday evening. So market opened here. This is the previous daily high. So this is the first thing that I mark up, right? The closest, nearest structure. So I don't personally trade structure. I simply use structure as a tool to identify where liquidity is and where there is potential stop losses that still need to be taken, okay? So we can see here that market made a high there on Friday evening. He pulled down a little bit, left a little gap. And then during Asia on Monday morning, we left some equal lows here. So you can mark that up. So equal lows. Excellent. Right, and then obviously there's nothing else for us to look in front because price has not got that. Okay, so we go back in time to see where there could potentially be any relevant liquidity that's left over from Friday. Okay, so when I look at Friday, obviously this is where Friday started. There wasn't really any liquidity. Price pushed up, rejected a little bit, pushed higher. We had a fake breaker structure to the downside. Now, how do we know it's a fake breaker structure? Obviously because price broke higher, right? So we had a fake breaker structure during Frankfurt. London didn't induce anything. It just pushed up, continued the move from Frankfurt. Then we got into around 10 a.m. London. Price started to retrace that move. So we had, you can see here, right? This was the first major kind of internal breakout. And then this was the actual breakout, right? So we can say that some breakout traders entered here and then some breakout traders entered here as well, right? Where would they be putting their stop losses? Right below here, of course. Why would they be putting stop losses in there? Because it's the previous low. Obviously, breakout traders, I'm not sure if you know, they tend to get induced the most, so they get trapped the most, and it's the easiest strategy. Every breakout you buy, every breakout to the downside you sell, stop loss just above or stop loss just below, right? So it's the easiest form of trading available. Yes, again, you can make money it, but it's obviously a very typical, well-known strategy that most people know. And obviously the market makers know it because they can see where the traders are entering, and it's quite visible in the chart. Where they've entered and whether they've been stopped out or not, right? So when you think about this price action here, price retraces, rejects, and starts to push away, right? So it doesn't really leave any liquidity here. You could say there's some sell side here. So breakout traders enter in there for the eternal structure, but obviously putting their stop losses above the high. So price retraces, and then New York Prime opens, shoots up, stops out these breakout traders, and then continues on. So realistically, when you look at this kind of price action, there's not really anyone entering, right? You can see breakout traders may enter here, but obviously because of how late it is in the day, like it's 4 p.m. and there's not a setup there, right? It's literally just a breakout. So yes, breakout traders would probably be entering, putting their stop losses maybe around here, maybe around here. Obviously this is the most typical level because time ABC, because this is a significant low, right? So price pushes up, and then does it take anything to the left? No. anything of significance here? No, this is just a little range. So the next significant high is obviously Asia high, and that's at 1.24, call it 25, and price is not even, well, it's there basically, yeah. So it did peak at that level and then began to reject on Friday evening, okay? So since then, price opened up, it left that little gap, started to roll over, and then you can see by the reaction during Asia and another reaction here, look where price came to, right? If we look to the left, obviously breakout traders didn't enter on the wick, they obviously entered on the candle close, but let's just say they entered around this area. Price on market open comes and obviously stops these guys out, because when you really think about it, right, if you're a breakout trader, you're entering at these levels, stop loss goes below there, price pushes up, and then the market's about to close, right? Obviously some people will stay in the market, but a lot of people tend to put their stop loss at break even because they want to protect the capital, right? And even if they didn't put their stop loss at break even, just go back, the market would have opened and it would have came to the break even anyway, and a lot of people would have just probably closed their positions because they didn't want to take a loss, right? So that's the way you got to look at that. Most traders think in kind of illogical terms because they try and protect the capital, but in reality they are just taking unnecessary losses or break evens, okay? So these guys, 99 times out of 10, I have to keep saying this, 99 times out of 100, they get stopped out, so get eliminated, okay? So now we're looking, okay, so where's potential liquidity? There's previous daily high, there's not a lot of sellers there. There's probably more buyers in the market from these areas in comparison to the sellers, right? So let's just play the price. So let's see what market does. Okay, equal low traders. So look, you can see where that internal breaker structure. So we can now call this an internal fake breaker structure because price broke internally higher and then broke lower. So these equal low traders obviously would have entered either on the break of this candle, or they would have entered somewhere around these candles where the rejection began and then put their stop loss right below. Obviously, if you're equal low trader, pattern trader, if you want to call it, you're not putting your stop losses there because the risk reward doesn't make sense to the high, right? So we would have liquidated these guys, we would have had the internal fake breaker structure, we had an inducement low. Now look left, right? So these guys here, right? So this was a price peaked. So if we put just a little horizontal line there, this is where price is, right? So again, remember these guys who were breakout traders, they've obviously already been stopped out during Asia. These guys who obviously entered upon this internal breakout, as price pushed up and pulled back into break even, nearly stopping them out, and then breaking structure again to the high side, obviously these guys go break even and these guys go break even to protect their capital, okay? So if these guys are both gone break even, so let's just eliminate this one because let's say they're both break even here. Price pushes up, right? Breaks this structure, pushes up again, market comes down, has an internal fake breaker structure, induces low. When we look left, right? These guys obviously didn't enter here, right? Because look where the wick was. They obviously entered at the close of the candle, right? So they entered there and they obviously upped their stop loss as they went along. This is what you got to pay attention to because this can literally revolutionize your trading if you genuinely understand it, right? Most traders who are trading breakouts, they don't enter on the wick because they don't see it as a confirmation close. They wait for the candle to actually close, the candle body, right? Now, when you see here, let's just zoom in closer just so you actually understand what I'm saying. Some of you may do, some of you may not. Look, this high is higher than this candle, right? So obviously they're not entering on this candle because it's not broke out above. This candle broke out, right? So they would have obviously entered around these levels, right? So even if they entered before the candle closed and it was already here and they thought, okay, let me enter and put their stop loss below. If we look to the current price, everyone who entered around this area of breakout, well, even if they entered here or halfway through the candle, they would have got stopped out by the inducement. Now, how do we know they got stopped out by the inducement? So I'm going to just remove this fake back and that. The reason why is because look at the reaction during prime time, right? It's London open. As soon as this wicked, you look left, even if a breakout trader entered there, there's the candle close, right? So if the breakout trader entered on the candle close from this break of structure, look there, look right, bang, they would have got stopped out break even, because if price goes so far away from your entry, your thought process is obviously, wow, I'm in so much profit, shit, let me protect it, or let me take some profit off and let me put the rest at break even, right? So this is something that I'll be looking for to potentially go long on, because realistically, the reason why I'll be continuing the buys is because this is the most relevant liquidity from Friday that was left. This is the most relevant liquidity that was left from the same day. We already trapped them by taking the breaker structure to the upside, which they thought, okay, we're breaking up, we're going to go take the high, and then it rolls over, induces them, stops them out, and then continues going in the opposite direction, right? So this is like a perfect trade that I would personally look for, because it's obvious, right? It's intentional. Every single thing in the market is pre-planned. There's no accidents. There's always a narrative and there's a story that's playing out right in front of us. And if we don't know how to mark up liquidity, then we're going to keep getting trapped over and over and over again, right? So this is just like a brief video, I tried to explain it as short, but as in much detail as I could. But this is just like a random day in the markets, right? So if you guys, if this video makes sense and you kind of understand my thought process on why I trade this way, then let me know, because if you do enjoy this type of video, then obviously I can make more of them. I personally said to myself, like I said to you at the beginning of the video, for 6 years of my trading journey, I was losing consistently. I would go and work 70-hour weeks. I was teaching yoga for 5 years in the UK, and I was doing deliveries in my car, right? So I was doing 60, 70-hour weeks, earning bare minimum, living my mum, struggling, trying to make ends meet, and it wasn't working, because I got into so much debt trying to trade. I was doing it wrong, and then I dug myself in such a hole that I couldn't break out or make my way out. So I just went on a deeper journey. I had to heal internally first if I wanted to make trading work, which is exactly what I did, right? So if this video makes sense and you want to understand a little bit more, let me know. I can make more of these videos. But that's one promise I made to myself, that once I actually become profitable from trading and I actually see that I'm making progress and the results are actually positive rather than being consistently negative, only then will I actually put myself in a position where I will share that knowledge and teach people how to actually trade. And it's only within the last 2 months that we've managed to open up a community where we teach this kind of strategy as well, right? So if you want to know more, let me know. I'll make more videos. But until then, take care and we'll see you soon.